for the last 7 days, I locked myself somewhere and I traded gold using only this scalping strategy. No bias, no changing the rules. I wanted to see if a regular trader can actually make money doing this, or if the spread and commission will completely wipe out my account. Here's the brutal, unedited truth of what happened, guys, and the strategy overall. Watch it to end so that you benefit, guys. Don't skip anything because this is life-changing strategy, guys. Okay, so now this is the strategy setup, guys. I used just simple rules. First of all, risk to reward, guys. I was trading 1 to 2 or a 1 to 3 trade. In that, even if you lose more trades, you will still be in profits, right? Another thing is waiting for the liquidity sweep, guys. We shall talk about liquidity sweep mainly in this strategy. And the third rule I was following is the trend, guys. I should first see the break of market structure to any side of the market before taking any trade, guys. Okay, so now this is it, guys. I'm going to go just slow so that you really understand what I'm talking about, guys. So now when you look at this chart right here, this chart, it has to take you just seconds to know the trend. This was a bullish trend. Okay, so this was a bullish trend. When you really start from right here, this trend was bullish right here. It made a high, it came back, it made another high like this, right? It was a bullish trend. Now I want to show you like what made those traders to be buying in this trade, and what we followed. I want to show you what we followed when we are trading this market, guys, because the first days we were trading this bullish market, right? So first of all, you have to first identify the low that made the break of market structure. First of all, this was our low that made the break of market structure right here. Okay, so after identifying this low right here, okay, then you identify the break of market structure was right here. Okay, this is the break of market structure right here. You can see that this is the low right here. Okay, this is the low right here, and this is the break of market structure. Then this is the retracement that the market made. So now what made this market to move up again? It is what we are going to see, guys. First of all, it is swept liquidity. You have to first find where the liquidity is resting, right? This gold, it always collects a lot of liquidity before it makes another move. So now this, after this break of market structure, then you come just down here, but not below this low, because most times when this low is broken with full momentum candles, the trend will change. Since we are bullish, now we have to look for liquidity from right here. Okay, so now liquidity rests in fair value gap and it rests in order blocks. Okay, so now you can see right here there was an order block right here. Then after identifying that there was an order block right here, just know that most people, they are viewing that order block. People who trade supply and demand, people who trade order blocks, they are all viewing. That means also institutions, also the big banks, they are seeing that. It means that they have to first come, take you out, and then they move. So now your role is this, is to wait for this order block. You see this order block right here? Wait for that order block to be taken out. Wait for the market to sweep that liquidity on an order block before you enter the market, guys. That's why you're seeing here, this order block, which was right here, you can see that the market actually came, it swept that liquidity right here. You can see that sweep. It closed below that order block. But remember, we are in a bullish trend. That's why we are buying. Okay, so now after sweeping that liquidity, it of course gave you confirmation. Okay, so you can see that after that, it gave you confirmation. It gave you a bullish engulfing candle right here on this time frame. So now here you can buy after taking out liquidity. Now you are safe. But now just know, don't put TP right here, because now we are scalpers. Remember, we just trade a 1 to 2 or a 1 to 3 trade. So you can always put where liquidity is found. You can put your TP to either fair value gap or an order block. Now, for example, here there was a fair value gap. So you can put your TP there. You can see how the market moved actually after taking out all those liquidity. Okay. So now another example that we can talk about is this. Just know this week, like on Tuesday, we traded this setup now. Okay. And also we first identified the break of market structure. Okay. It was right here. Now, since, remember I told you when the market breaks a low, of course, it means that the market direction has changed, right? So now, when you really look at this market, okay, remember it was a bullish market, but now it reached a time and broke our last low. Remember, this was the last low that we were talking about. Remember, when the market actually broke structure right here, this was a high, this was a break of market structure right here, and made a high. This was a high that the market made. So that's the high that the market made. After market making that high, then it retraced, then again it made another fake high. But now this one, the high didn't close above the other existing high. Remember, we had this high that was existing right here. But when the market actually retraced again right here, you can see that it didn't close above this. It meaning that the market is changing direction. Now we shall consider this as our low, as our new low, right? Now it has started creating lower highs and lower lows, guys, right? That's why here we shall consider now this one, we consider this as a lower low. In that, when the market comes and break it, of course, we shall have changed direction from bullish to bearish. Okay, so now here you can see that yes, the market came and broke this, right? You can see that the market came and broke this right there, and it closed below this, right? It closed below this low, right? So now after that you wait for the retracement, but before the retracement, I told you we have to first identify where the big banks will come and sweep before any move. Now here comes this zone. Here comes the high that was here, but this high was obvious. Of course, the market would not come, it will not move from that high. Now that's why we would wait for another high right here. I told you, you first identify the liquidity setups. Right here, you have to identify where liquidity it is resting. It was resting from this order block. That's why we would not consider this order block, right? Because a lot of liquidity was resting there. Of course, the market had to come and sweep that liquidity. That's the move that you are seeing here, this market made. It came up to here, it swept liquidity, it closed below, and it sold again right here. Okay? All these moves, they are done after sweeping liquidity. Okay? That's why sellers, they were waiting from here after they have taken almost all the early sellers right here. Okay? So our is to trade a 1 to 2, guys. We should not wait for a lot of moves, guys. So now the last example that you can talk about is this, guys, right? And this one, it actually happened yesterday. It happened on Thursday, guys, right? So this one, it was actually also a sell move. I think it was a sell move, guys. Why? Because now this one is a bearish market, but this one, there was a break of market structure right here, guys. And I told you we always have to identify the high or the lower high that made this break of market structure. Of course, the lower high was right here. Can you see that lower high? Then after this break of market structure, you can see that actually the market retraced. This was the retracement market made. Okay? And after market retracing, of course, we have to look for where liquidity is resting. Liquidity is resting on our order block. I told you most of the liquidity is resting on order blocks and fair value gap. That's why you are seeing liquidity on this order block right here, guys, right? There was liquidity on that order block. That's why when the market came right here, it just made a fake sell. And it came back, it swept this high, then it sold again. So now here the big banks, they were waiting for the market to sweep this, okay? Waiting for the market to sweep this high after taking out these early sellers before it made another move, right? On this lower high, okay? And they are targeting a 1 to 2 trade, guys, right? So all this is liquidity sweep, right? And actually there are several mistakes and lessons that I learned in this 7-day challenge, guys. So it is not waiting for liquidity sweep. Some traders, they don't wait for liquidity sweep. They just enter immediately after seeing actually green candles. They don't even follow the trend. When you don't follow the trend, gold will actually sweep you out. This method actually, it moves leaving wicks, right? If you don't follow the trend, it will take you out, guys. So if you really follow this strategy, you'll get low risk to high win rate trades, guys. Okay, so if you enjoyed this video and you have got something today, consider subscribing to it, give a like this video, share to friends. And also if you trade prop firms, guys, 8 cap challenges has got you covered. Link in the description. It is having low spreads, they are very low, and also the withdrawals and deposits, they are very quick. And you can get a 10% discount if you use my link in the description below. So bye.